Have you ever thought about investing in real estate with little money? It may sound like a far-fetched idea, but it's entirely possible. Many people are under the impression that real estate investment is the exclusive playground of the wealthy, but that couldn't be further from the truth. You see, the world of real estate is vast and varied, offering opportunities for every budget. It's all about knowing where to look and how to leverage what you have. The advantages of real estate investment are numerous, from the potential for consistent cash flow to the opportunity for appreciation and tax benefits. Moreover, the profit potential can be substantial. With the right strategies and a bit of hard work, you can turn a small investment into a lucrative portfolio. It's about making your money work for you, not the other way around. Now you might be wondering, how can I start investing in real estate with little money? Well, let me show you how. Before we dive into the steps, it's essential to grasp the basics of real estate investment. Let's start with the core concepts. Real estate investment is the purchase of land, buildings, or both, with the intention of earning income or profit. It's a tangible asset that has intrinsic value, and its worth can increase over time. Now, let's touch on the different types of real estate investments. First, we have residential properties. These include homes, apartments, townhouses, and vacation properties. As an investor, you can earn income from residential properties through renting them out or selling them for a profit. Next, we have commercial properties. These include office buildings, retail stores, and shopping malls. Commercial properties can generate income through rent, leases, or sales. However, keep in mind that they often require a more significant initial investment than residential properties. Lastly, we have industrial properties, which include warehouses, factories, and distribution centers. These can be rented or leased to businesses for operations, and they often provide a steady income stream. However, it's worth noting that each type of real estate investment comes with its own set of potential risks and returns. For instance, residential properties can provide a stable income stream, but they also come with the responsibility of property maintenance and dealing with tenants. Commercial properties can bring in higher income, but they also require more significant investment and bear the risk of business downturns. As for industrial properties, while they can offer a steady income, they can also be affected by economic cycles and trends in global trade. So as you can see, real estate investment is not a one-size-fits-all kind of deal. It requires careful consideration of your financial capacity, risk tolerance, and investment objectives. With these fundamentals in mind, we are now ready to explore how you can get started with little money. So, how can you invest in real estate with little money? Here are some steps you can follow. Firstly, consider pooling resources with others. This strategy is often overlooked, but it's an effective way to reduce the financial burden on any one individual. It's like the old saying goes, many hands make light work. You could team up with friends, family, or other like-minded investors to purchase property. Each person contributes a small amount, but together you can make a significant investment. The potential benefits are clear: shared costs, shared risks, and the ability to invest in larger properties. However, it's essential to set clear agreements from the outset to prevent misunderstandings and disputes further down the line. Next, you might want to explore real estate investment trusts, often abbreviated as REITs. These are companies that own, operate, or finance income-generating real estate. When you invest in a REIT, you're buying shares of a company, not a physical property. This means you can start with a relatively small amount of money. REITs are required by law to distribute at least 90% of their taxable income to shareholders as dividends, so they can provide a steady income stream. On the other hand, like any stock, REITs can be volatile and may not always provide the returns you expect. Another strategy is to rent out part of your own home. This could be a spare room, a basement, or even a separate guest house if you have one. Platforms like Airbnb have made it easier than ever to connect with potential renters. This method can provide a steady stream of income that can help you pay off your mortgage faster or save up for another investment property. However, becoming a landlord, even on a small scale, comes with responsibilities. You'll need to maintain the property, deal with tenants, and navigate local rental laws. Finally, consider using seller financing. This is when the person selling the property also finances the purchase. Instead of getting a mortgage from a bank, you make payments directly to the seller. This can be an excellent option if traditional financing isn't available to you. It can also allow you to negotiate more flexible terms than a bank might offer. But remember, if you default on your payments, the seller can take the property back, so it's crucial to ensure you can afford the agreed-upon payments. By following these steps, you can start your real estate investment journey even with limited capital. Each strategy has its own potential benefits and risks, so it's important to do your research and consider your personal circumstances before jumping in. But with a little creativity and strategy, you can make your real estate investment dreams a reality, even with a small amount of money. Now let's recap the key points to remember when investing in real estate with little money. Firstly, understanding the basics of real estate investment is crucial. Knowledge about the market, the types of properties, and the legalities involved prepares you for sound investment decisions. Secondly, choosing the right investment strategy is paramount. Remember, the goal isn't to own the most properties, but to make the most profit. Consider strategies like renting out properties, flipping houses, or investing in real estate investment trusts. Next, be aware of the risks. Like any investment, real estate has its ups and downs. The market can fluctuate, tenants can default, and unexpected costs can arise. So always have a contingency plan. Finally, patience and diligence are key. Consistently evaluate your investments and be ready to adapt as the market changes. Remember, real estate investment is not a get-rich-quick scheme, but with patience, diligence, and the right strategies, you can make it work even with little money.